Yep. So for all of those that are joining, we're going to give it a couple minutes to allow people to come in, and then we'll go ahead and get started. Just wanted to let everybody know and say thanks for being here and everything, especially on tax day.
Yeah, that's right. I thought that was a bit ironic that we ended up with today as our day.
Yeah,
Hope,
no kidding.
hopefully everybody paid in their estimated amounts and everything's good.
All right. It's 6:30 Central Time. Just so everyone knows, we're going to give it another minute or two before we officially get going. And I expect that people will come in and out as time starts. So people are probably also, maybe putting it on in the background for their meal or anything.
Or, I was thinking about this and it's interesting that in dentistry, there's obviously such a focus on taking care of patients. I don't know about you, but it seems like some dentists and even some groups of dental practices, they sometimes just sort of push the finance and the accounting and those things, sort of push that off to the side because they're so focused on patients, which is great. I mean, it's a great thing to be and do, but it's just interesting that there are so many opportunities to really create great value for patients when you really have a handle on the financial element of the business, and you spend a little bit of time and effort to learn about it and get the right advisors around you doing it. I don't know what your take is or what your experience has been with that.
I would agree with that. And we were talking about it before we started, but when I've talked to a couple of dental students earlier this week and talking to them, going to talk a little bit about them tomorrow. And even I go to multiple schools in Texas and a few that are outside of Texas to, just and be able to help them understand kind of what is insurance because at first, whenever I went to talk to people, I was like trying to talk to them about specific types of insurance. And then I quickly learned was like, hey, people actually just don't know about insurance in general, just like probably in the same way as accounting, because they're not having courses like this, whenever they're in dental school. And most, probably all pre-med in terms of undergrad from before then. So,
Yep.
all of the things that we're going to talk about today, especially from the accounting or the financial side, are going to be really insightful for anybody involved and anybody who's going to be able to listen to this. So, yeah, I mean, honestly, with that, Ken, it's probably a great leadway for us to just go ahead and get started. So, hello to everybody who's here. My name's Herb Ford. I've hosted several of these webinars, part of Risk Strategies Dental Practice, and today I've got the great honor of hosting Ken Kaufman with AccruDent. Ken, why don't you go ahead and kind of take it away, allow yourself to brag about yourself, and yeah, tell us who you are.
Yeah, hey, thank you. Yeah, hopefully less of me is always going to be better. So we'll try to keep all of that at a minimum here. So I'm really grateful for the opportunity to be here. In fact, I just want to stay on this slide for a second, and Herb, I want to thank you, and I really want to say too that Wallace Risk has played a major role in and risk strategies has played a major role in my career in dentistry. We've used your services in two different DSOs that I've been involved in, and just really grateful for the services you guys provide and the way that you help obviously protect, but also you're doing a lot of things to help things grow with your clients. And so just grateful for the opportunity to be here. So this is just a little bit about me. I've been CFO or Chief Financial Officer since early 2000s. I've been in dentistry for about as long as that. I have had multiple exits in dental, and I did an undergrad at BYU, MBA at the University of Georgia in finance and entrepreneurship. my greatest accomplishment is the fact that I've been married for almost 27 years now. And my wife and I have 8 kids, ages 9 through 25, and one daughter-in-law. So that's just a little bit about me. My organization is called AccruDent or AccruDent, as Herb said. We're a startup, and we're doing a lot of things to try to really help educate the market of dentists and dental groups on how to really leverage finance to be able to grow and just accomplish whatever your dreams are. If you have one practice, or if you have a dream of having 20 or 50 practices, all of those things are going to be very dependent on financial components. Also, I did couple of years ago, my daughter and I wrote a book called Financial Secrets to Grow Dental Organizations. I was motivated to do this because I really wanted to do something for the dental industry that's given me so much. And I felt like this was a great way to give back. And a lot of the things we're going to be talking about in today's presentation, there are bits and pieces and components of that in the book. And if you want to get it, it's available on Audible. It's out there on Amazon and everything, just anywhere you can find books. So our focus today is to really dive into the key frameworks that drive financial success in the dental industry. I've been doing this for a really long time, and so I'm hopeful that I can bring some insights and share some things that will be helpful. Framework number one that we're going to talk about, and we're going to end up working through about 20 frameworks here in our time together. But framework number one is what's called cash basis bookkeeping. This is the very base level of, if you've got a dental practice or multiple practices, just getting all of the financial information, all the transactions, and categorizing them in a way that can make sense, such as you put all of the labor cost into one line item, and you put all the supply costs into one line item, and things like that. So very, very basic, but is very foundational as well. And this first framework is referenced as cash basis bookkeeping. And what that means is cash basis is just whatever comes into the bank account and whatever goes out of the bank account. The net of all that is what's happening and occurring. This is not the most ideal way to do things, which is why our framework number two is actually referred to as accrual basis accounting, which is basically an upgrade or a step up from cash basis accounting. And the reason why I've got this in here so early is because this is a place where I see dentists and I see dental groups both struggling. I'm actually helping a group right now that has 30 locations that is struggling with getting to accrual accounting, and I'll just take a minute and explain what this means. When you are organizing all of your financial information on a cash basis, again, it's just what cash is coming in and going out. With accrual accounting, what happens is it actually uses something called the matching principle, and it will connect the production that's being generated to the expenses like payroll and your rent and all of those things to the period in which all of that production was generated. And when you do that, your financial statements get extremely accurate. If you're not doing it that way, it's not accurate because it's just this in and out, and you don't actually have all of the right information lined up in terms of the production that's generated and the costs that go with it. And so, and we use a monthly closing checklist. That's what's highlighted here. But I just want to talk about what the benefits of this accrual accounting are, and why even if you have just one dental practice, you may want to consider doing something like this. And that would be converting from a cash basis to an accrual basis. The benefits of accrual are, first, you will always get accurate reporting. And I'll just take 1 second or a few seconds here and give you an example. My very, very first CFO job, I was so excited. I got this opportunity. It was at a construction company, and I said, "All right, I'm just gonna be amazing." And I'm so excited to be in my first executive team meeting and all the things that go with it. I walked into the meeting. The controller had brought the financial statements for the prior month, and I was shocked at what happened. An argument, literally an argument ensued for 30 minutes about why the financial statements were wrong. One person said, "Well, wait a minute, we didn't pay that supplier yet, and so that's why we're showing more profit than we should." And somebody else would say, "Oh, well, wait a second, no, we when we did the takeoffs on these things, we underestimated, and so that's why this is causing our financial statements to be wrong over here, and there's this and there's that." And I was mind blown. I couldn't believe that that it was just an argument, and rather than having a strategic discussion, looking at the financials, figuring out what we need to do next to grow and build the organization. And
Especially for your first big meeting.
yeah, it was insane. And so I couldn't have scripted it any differently. Like I just can't even believe that it happened. And after this half hour went by, I said, "Hey, do you guys know that there's actually a way to fix this so that like we can see the actual performance of the business on a month-to-month basis and not have this argument about all the lumpiness that's going on in the financial statements?" And they said, "No." So, well, it's called accrual accounting, and like we can put that in place here, and we won't have to have this argument anymore. We'll just be looking at things that are truthful and helpful, and we'll be able to like actually run the business better. And they said, "Yeah, we would love you to do that." I'd never converted from a cash basis to an accrual basis in my life, and I had to sort of self-teach myself through the process. But we put that in place, and all of a sudden, again, the argument went away, and we were actually having real good discussions about how to grow the business. And so, again, the accuracy is critical here. The better decision making, because you've got the right information. You're actually going to be compliant with GAAP, which stands for General Accepted Accounting Principles, and that means you can't achieve that without switching to accrual, as well as a lot of times banks, lenders, they will stop it. And even sometimes in your underwriting for insurance products and those sorts of things, not having GAAP compliant financial statements that are accrual based can sometimes really hurt the process of getting the insurance in place that you need.
Yeah,
We
I can imagine. Sorry, I was just going to say that having the accrual would probably be really beneficial. Also, if you were trying, if you were going to work with a bank to try and open up your second or third location, right? So being able to provide these documents to them or have your finances set up in this way is going to already put you in a better foothold, compared to the bank, and hopefully make their process a lot easier.
That's exactly right. One of our clients we're working with, they have 9 locations, very successful group, and we started helping them because they were getting in trouble with their bank because their bank wanted them to have accrual based or GAAP compliant financial statements, or in some instances it would be literally have audited financial statements. And so, we went in and helped them get all that cleaned up and turned around and get them back on board with the bank. So the bank is now continuing to fund their acquisitions that they're doing and those sorts of things. Not having GAAP compliant or not having accrual based financial statements will become a massive hindrance to your business over time. In this instance, we're talking about, raising debt to grow, but there are, many other challenges that it creates. So it enhances planning and forecasting, which, by the way, right, if you're on cash basis and it's all lumpy and messy, how in the world would you ever forecast off of that? So when you get accuracy, now all of a sudden the forecasting and the planning and the visibility into the future becomes super valuable or super accessible. It supports the healthy and scalable growth, improves vendor and supplier relationships. And here's the big one, guys, you will get paid more money for your business when you sell it if you are on accrual accounting, period. Like your enterprise value will be greater and your outcome will be greater as a result of it. Okay. I wanted to just put this little teaser out here, Herb, for a minute. We
Sure.
do have a special offer for everyone who's attending this webinar or who's going to listen to it later or who's going to read the slide deck later. I'm not going to tell you exactly what it is, but it has something to do with accrual accounting, and it has a special offer that we're making available to everybody. So we'll get to that at the end.
Wonderful. Looking forward to it.
So jumping to framework number 3, this is something called consolidated reporting. And this is where you're able to, if you've got multiple locations, this is where you bring everything together so that you can look and see at a very high level what's happening through the whole organization versus, well, I've got these 5 dental practices and I look at each of their sets of financial statements, separately from each other. There's a way to consolidate all that so that you can look and see how is your total enterprise performing and those sorts of things. And so that's what framework number 3 is focused on. And the key thing is you want to be looking at your income statement based on month to date, quarter to date, year to date, and your trailing 12 months. And you always want to have that visibility in your financial statements so that you have great clarity about what's happening in your organization. Framework number 4. This is what is referred to as free cash flow. This is a really nerdy, geeky finance thing that is out there in the world. And the reason I put it in here is because free cash flow is the number one most important financial metric that you need to be tracking. And let me tell you why. Free cash flow tells you if during whatever period's being measured, if it's the last month or the last year or the last quarter, it tells you if you have been consuming cash or if you have been generating and creating cash. Now, great businesses create cash. Businesses that struggle consume cash. Again, nothing in finance is actually rocket science. That like literally the most complicated formulas we ever do, it's like maybe a division problem or a subtraction problem. There's not a lot complicated here. But the ability to see that, and I'm surprised, Herb, that in the dental industry, even though I've been advocating this for the last 20 years, that we should all be focused on this, it is very rare that I come across someone who can actually tell me if their business is consuming or burning cash in
Well,
their business.
it's really difficult, I think, for a lot of practice owners to, throughout the entire day, they're seeing patients, they're treating patients, they're dealing with the staff, in terms of, their employees. At the end of the day, then like this is probably the bulk of the time where they can actually focus on that. And they also have all the rest of their lives to deal with at the same time. So, it's just one extra thing, so, that's, it's one of those things probably when you're laying in bed at night or you're in the shower and you're thinking about, oh, I should be doing this right now or thinking about doing it, and it's just like it hasn't gotten to it yet. So, we'll probably be talking about stuff like this for a long time, but it's one of the great reasons why you're able to provide your services and provide advice on it.
Yeah, absolutely. And we love this. The clients that we do work with, and help them with this, it provides a great clarity as well as some peace of mind about what's happening in the business. Because often when we're running our businesses, things can feel very out of control, and we don't have the visibility that we always want. And I get it, and we're happy to try to help. Jump into framework number 5. This is a benchmarking and ranking file. Now, I've just found, and I put this in, if you have one practice, awesome, great. This one slide won't be as relevant for you. But I love dentists. They're smart people. I've never met a dentist that just isn't brilliant and doesn't have massive capabilities and skill sets. When it comes to this, we tend to want to do benchmarking and say, well, hey, what we want to talk to our friends from dental school and say, hey, what percentage are you paying for supplies? And hey,
Mhm.
what's your gross production like and in this type of a practice, and so on and so forth. And what I've found is that if you have multiple practices, the very best benchmarking you can do is against yourself. It's against your own practices. And so what I've done here is I've just shown kind of a model that we use to do this with our clients, but we literally list out all of the practices that are supported. We draw a red line that says, hey, below the red line, you're in the bottom half of the practices in your group. And if you're above the red line, you're in the top half. And then what we do is we go to everybody in the on the lower half, and we say, hey, go talk to the people on the top half, find out what they're doing, implement those into your practices, and watch things start to grow. And we literally set it up so that the bottom half is always chasing the top half. And all that does is every month you have people thinking about, how can I improve? How can we grow our practice? How can we do these things better? How can we do these things more efficiently? So this benchmarking and ranking file is a very important framework. Primarily, once you get to your second location, your fifth location, your 10th location, those are important elements. And along with that is the DSO structure. And when you're building out a group, and if you have a desire at some point in time for there to be a non-clinician that has ownership in some material way in the business, you have to create a DSO structure. And this is something that I've worked with and been a part of through my entire career in dentistry. But it's a very basic model of each practice has its own legal entity, and then you have a holding company. And the holding company, which in this case, in this example, it shows DSO LLC, it's supporting clinic number 1, clinic number 2, and clinic number 3. And each one of those need to be have their own set of financial statements. And there is a lot of work that has to be done because there's a lot of transfers and intercompany balances that go back and forth. So there's some technical accounting things that have to happen in order to make this run. And if you are at a place where you want to start a DSO and put this structure in place, or you've already done it, there are some key tricks of the trade here, which generally means we have to make sure that we're running it compliantly, and we have to make sure that we are, because what I've seen here, Herb, is dentists will say, okay, I want to put the DSO structure in place. So they get the legal documents all done, but they don't realize that it requires a lot of financial transactions with money going back and forth between all of these different legal entities. And it can become very complex. In fact, when I was the CFO at Community Dental Partners, which we grew to almost 80 locations, we literally had over 100 legal entities. We had over 150 bank accounts, and all these things had to be reconciled and pulled together. High degree of complexity. So, and I realize, there probably isn't anyone on this call that is dealing with that level of complexity. But the DSO structure is one that you've got to be aware of. And it can give you a nice compliant way to allow non-clinical owners, or I'm sorry, non-clinicians to be owners in the holding company. And so it's a great tool if your business needs it. And if it does, make sure you get the sophistication on the accounting and finance side to make sure it's run compliantly.
Yeah, no, absolutely. I think this is a really important slide, and also just the fact that you're able to show a chart there, I think is really important because I've talked to a number of clients who, they consider themselves to have partners, but it's maybe like them and 3 other doctors, and they don't have they haven't gone to the formal agreement of creating the DSO structure yet. Or maybe they're at the point where they're like, oh, well, we kind of all work together. Maybe they, bounce around to a couple different offices within each other, and because they're friends, or whatever it else is. So allowing people to actually have a good idea of, hey, what is this actual chart? What is the structure that these people are talking about is really important. So I appreciate you putting that in there.
Yeah, you bet. All right, so we'll jump to framework number 7 now. This is it's close to one of my favorites here, Herb. The 13-week cash forecast is what I refer to as the sleep at night report. Now, all of the entrepreneurs that are on the call, dentists, group leaders, all of those things, we've all had the moments when we had to double clutch and say, I don't think we're gonna make payroll. And that is the scariest thing on planet Earth. When you're running a business, because if you don't pay your employees, we all know what happens, and it hurts the business dramatically. The 13-week cash forecast, its purpose is to give you visibility over the next 13 weeks of what is projected to happen to cash flow on a week by week basis. And I've got a fun little one to show you here where you can see we line everything out. We do a significant amount of forecasting and work around this, which being accrual accounting makes it easier because we're working off of the accurate data so that we can actually start to project into the future what's going to happen. And so this 13-week cash forecast is one of the very first things we will put in place with our clients to help them just get that comfort level about, hey, my next 13 weeks, what's happened to cash flow? And again, are we consuming or are we generating cash? And how is that all flowing through with all of your payroll that you've got to pay and the suppliers and just all of the ins and outs that go into your business? It puts you in the driver's seat. It puts you in control so that you're no longer worried about making payroll. And the reason why is because this forecast will tell you 13 weeks before you're going to have that problem. And I
Yeah.
don't know about you, Herb, but if I have an entrepreneur and they need to solve a problem and I give them 13 weeks to do it, they can do it. But
Oh, a full quarter? Absolutely.
if I give them 2 days, if I give them 5 days, that can get really, really difficult fast.
Mhm.
So this is one of my favorites, and our clients just absolutely love having this clarity and visibility. All right, let's go on. Our framework number 8, this is budget and variance analysis. Now, I know there's a stigma about budgeting and why should I have to budget and all of those sorts of things. I'm going to tell you why right now. One of the most important things you will be able to do as a leader of your business is have the ability to project into the future what is going to happen. It is a crystal ball effect. And the only way you get there is by saying, okay, here's our budget. Let's try to do this. And then over time, we need to look at, okay, how are we doing on that budget? This is the variance analysis side of it, where we say, oh, I said we were gonna in the budget, I said we were gonna do $100,000 of gross production, and it turns out that we only did $80,000. Well, now we have a lot of things like we need to ask ourselves the question, why? And what happens is we start learning more and more about how our business works. We start learning more and more about what we can tweak to change to create better outcomes over time. And I'm not just talking about financially, better outcomes for patients, better outcomes for our staff and suppliers and everyone. And so the budget and the variance is an exercise that over a year, over 2 years, over 5 years, you start to learn what actually the drivers are that make your business successful. And now all of a sudden, once you know the drivers, you can actually start improving the business as a result and getting better and better at projecting the future. All right, any questions on that, Herb, or does that?
No, I think that makes sense to me. In terms of overall the importance of a budget. I think that could probably be talked about several other ways, but it can only be one framework. So
Yeah, that's right. It only gets one. That's right. All right. This next one is an interesting one. And this may not apply to some that are on the call, but it would be helpful just for you to know that this exists. When you get big enough and you've got enough locations, the bank will loan you money, but they will require you to live up to various covenants to maintain that debt position. And if you fall out of compliance with that, that can put you in default, and ultimately it could mean the bank could come in and completely take over your entire business. Now, I'm not a doomsdayer. There are some DSOs right now in receivership just because they got themselves out of whack and their financial ratios weren't keeping up with with what was happening in the business. So there are just some challenges out there with some of the larger DSOs. But what we want to do with framework number 9 is we want to be able to say, hey, every month I actually self-monitor my covenant responsibilities. And I make sure that I am in compliance with those. And I actually show my bank on a regular basis that I'm in compliance. And that makes the bank very happy. That makes the bank feel really great about making the loan. It also can help the bank want to give you another loan or potentially give you access to additional capital over time. But managing this and looking at this on a monthly basis with all of our clients, we put this right next to the financial statements so that they have total clarity about what's happening with the bank, how much room they have, so to speak, in terms of the covenant ratios that they have to maintain. Go ahead, Herb.
I was just gonna say that sounds incredibly important, especially kind of going back to some of the well, some of the earlier frameworks with just bringing in accrual accounting in general of, and being, especially being in compliance with GAAP. So that way you can also, again, just makes you that much more likely to be, in the eyes of the bank or whoever, the third party may be, that you look like you are, what you're doing, you're a good client or a customer of theirs. And, just with like almost any business, just for like with our doctors or, our practices, like if you've got a great patient, they're great, it's great to have them in the chair, they pay things on time, you have no problem ever seeing them again. A very similar aspect, I would imagine, with, if you're working with a lender or any other third parties, with being able to provide this proof of these services that you're like, hey, we're on top of the things that we're supposed to be doing.
Yeah, exactly right. Couldn't have said it better myself. All right, we'll go to framework number 10. This is called adjusted EBITDA. This is an important framework because when we are ready to have our practice or practices evaluated for what is the value of the business or of the specific practices, your EBITDA number most likely is messed up with a bunch of stuff in there that maybe you have some personal expenses running through, or maybe you hired a consultant for, let's say 6 months to help you get your business turned around and they're not in the business anymore. What adjusted EBITDA is it says, okay, here's what the EBITDA shows on the financial statement, but now let's dig in and let's back out or let's pull out any of these one-time non-recurring expenses or anything that just won't persist when a new buyer, for example, buys the business. And so this is something that we do and we update with our clients every month, and we keep this running. So we always, and the term here, Herb, is it's a trailing 12 month that we always want to be looking at, because that's what somebody who would want to buy your business is going to care about. Well, what was your last 12 months like? It doesn't matter if it was, if that ends in June or if it's in August or whatever. They want to see that trailing 12 months. And by doing this, it means our clients are always ready at the drop of a hat, so that if somebody wanted to come and take a look, they could always put in front of them, hey, here's our EBITDA, and then here's actually our adjusted EBITDA, where we backed out some of these expenses and some of these one-time non-recurring things that are not relevant to the business moving forward.
Makes sense. No, makes sense. And, one of the things that I want to add, just in case, for anybody who's currently watching or will potentially watch, is that, we talk about EBITDA a lot, or a lot of organizations talk about EBITDA. It's in the news a lot, but you can't, if you're on LinkedIn, it's hard not to go on LinkedIn without, seeing something about EBITDA, or, if somebody's talking about their multiple of EBITDA. Just so everybody knows, that is earnings before interest, taxes, depreciation, and amortization.
Yep.
One of the things I want to make sure that is that we're all on the same page. So, I mean, obviously we all have Google or whatever else, but just want to make sure that that bit is that information is there for anybody who needs it.
Yeah, that's a great call out. Thank you for hitting on that. I've been doing this for so long that there are sometimes where I forget that I need to just slow down and give
No, you're doing fantastic. I think that's part of it is, same thing that I've learned when I've talking to people about insurance is that, there are so many different phrases that I could use, and I just want to make sure that, I've found myself in conversations where I'm just like, oh, you know what, I need to say this in a different way. And so I just want to make sure that we're, we're doing that the same way. So, but no, Ken, keep moving along. You're fantastic.
Well, and where I'm at too is when it comes to just EBITDA in general, EBITDA is a lazy man's shortcut to cash flow, to free cash flow. Right?
That's a much better way of saying it.
It all goes back to, am I consuming cash or am I burning cash or am I generating cash in my business? All right, number 11. This is what we call the 12-month rolling forecast. The way you want to think about this specific framework is at any given time, you always want to have ready at the ready to pull out and look at the plan for the next 12 months. And this 12-month rolling forecast, and this is something that gets put in place once you've got the accrual accounting and once you've got some of these other basic frameworks in place, this becomes wildly helpful for you to have visibility about what's going on because your budget, well, when you budget, you're going to miss. And there's going to be some variance that happens. And what this report does is it keeps you knowing exactly what is going to be happening the next 12 months if all things stay the same. If nothing changes, there's no pandemics or anything like that would occur. And so this is a powerful one because it just allows you to always know what my next 12 months is looking like and where I'm headed in the business. All right, let's jump to framework number 12. Pro forma modeling. This is where things start to get fun. This is where we start to dream big and we start to say, hey, I've got this great idea that I want to do. I want to go and I want to do a de novo practice because my current practice, I have too many patients. There's a great spot down the road. I'm going to go and do a de novo and I'm going to send, because I know some of the patients will be closer to that one than ours. And we're going to do this. Pro forma modeling dives into all the assumptions, figures out what is it going to take to make this happen in terms of whatever the project is. And then it allows you to step back and say, okay, this project versus these other 10 ideas that I have, which one's the best one? Which one should I move forward with? It gives you all of the information you need to know about how much capital it's going to take to do your fun little project, how long it's going to take before that gets to a break even and actually turns profitable. And it's going to also tell you when you're going to get a full payback on the investment that you make. Because if you're going to go and do a de novo, you got a bunch of construction costs, you got a lot of things that are going to have to happen there that ultimately allow you to do this. So the pro forma modeling framework is every time you've got one of these big decisions, you plug it into a model, you build it out, and then that gives you a really good idea about, hey, is this project as good as the other 10 that I have? Is it worse than them? Is number 7 actually the one that has the highest ROI? It gives great opportunity for prioritization.
And I'm guessing, Ken, you'd be able to help somebody create this model for them and,
Right.
just to, right. Okay. Perfect.
Yeah, we do this a lot. We do this a lot. And then there's one additional framework here that is around modeling. And this is the 5-year model. And I wanted to separate this one out because this is critical. And I'm going to talk in terms of when you sell a business, but this really is just good practice for building a great business. And what happens here with the 5-year model? Let's say that you're going to sell your business to someone. Well, when that transaction occurs, you get paid. The buyer, the seller sells the business, and the buyer pays the seller.
Mhm.
And when that transaction happens, guess what? The buyer, it's not as if they're going to magically drop a whole bunch of money into the company. This is a transaction between the owners. And now you have new owners who are going to care a great deal about, hey, how effective am I at, or how strong is the business, and what is the next 5 years going to look like? And am I excited as a new owner for that outcome? And the 5-year financial model it takes a fair amount of effort and time to do this. We build it out. It's called a 3-statement model. And when you're going through a process, you want to be able to show the buyer what the next 5 years is going to look like. And you can't just whip that out and throw it together. You've been budgeting and learning what the assumptions are that need to be made. You've got this 12-month forecast that you're doing. You have these tools that are informing so that you can have validated assumptions that are layered into this model, and a buyer can now look and say, oh, okay, if all things stay equal and if we continue to operate the same over the next 5 years, here is what this business is going to generate. And then that's what gets an investor excited to say, we like that outcome. We're willing to come back over here now and pay a pretty penny because you guys have built a great business. It's functioning and running really well. And you guys have set it up so that none of the associates are going to leave and all the value is going to stay inside this business. And it becomes a very, very valuable tool for showing somebody the value of your business into the future, 5 years.
Yeah, that's important to have.
All right, we're going to go to framework 14, KPIs. Everybody's got opinions on these and what should or shouldn't be tracked. Most practices end up figuring this out in terms of what's important for them. We do a lot of sort of crowdsourcing with other CFOs and other finance people in dental, and this is a crowdsourced version of practice and DSO level KPIs. The DSO ones unfortunately got cut off when I put it in here, but you can at least see the practice level, some of those that are there. KPIs are super important so that you can have a nice, consistent way to measure progress. And everyone knows what's expected. You can build a great culture around very clear KPIs.
Yeah, I think it's probably really important for, for practices or group practices to also convey what those KPIs are to their staff. So that way everybody's on the same page, right? To make sure it's like, hey, look, this is, what we want, for the culture of the practice and for us all, to succeed and be able to do the things that we want to be able to do. It's probably really important for everyone to be on the same page of understanding that. Because otherwise, if you're the only person and you're the owner who, you're the only one who's looking at the KPIs and everyone else is like, oh, why is this not, you're wondering why this isn't happening and then everybody else doesn't know about it. I can imagine that would be really frustrating, or at least it can slow down the actual progress that you could reach if everyone's on the same page.
That's right. Couldn't have said that better. And I think that having doctors or others in the organization that help everyone understand the why behind these metrics. For example, if we're going to look at average care per visit, like that's a big deal. There's a patient there in front of us who has potentially, we can value it by dollars and cents here, but let's say they've got $15,000 or $2,000 of potential treatment. And it's like, okay, what are we going to do? How are we going to help the patient feel comfortable and feel excited about moving forward with this treatment? You got financial concerns. You have concerns about, is this doctor, do they really know what they're doing? And I'm nervous and I'm, because what is it about? A third to a half of Americans are have some fear around dentistry in general. And so how do we help with that? And what it all comes down to, in my mind, this is what it all comes around to, and that is that we have a responsibility to run our practices profitably. And we should never be embarrassed if we have profit inside of our dental practice. And the reason why I say that is because the only way that your dental practice is going to get better and be able to invest in new equipment and new technology is if you're actually generating a profit. And the KPIs are generally designed to say, hey, this is helping us work toward trying to be a profitable dental practice, because when we're profitable, it means we can do more for our patients. It means we can serve them at a higher level than we did before.
Yeah, no, well said.
All right. This next framework is around non-clinical support team. This is really for anybody who's trying to grow out multiple locations. There is a process that you have to go through in order to hire non-clinical staff that are going to do things where you pull those functions outside of the dental practice, and you have, I don't know, it could be called a corporate team, a DSO team, but where you have non-clinical people that are doing some of these important functions so that the dental practice can focus on taking care of patients. and all the administrative like RCM and some of those other things can be handled in other ways. So framework number 15 is actually how do you profitably implement those all of those functions and pull the burden away from the practice so that hopefully more treatment that's diagnosed by doctors can ultimately be accomplished. All right, we're getting close here. Herb, to the end. And by the way, if there's any questions, I probably should have said that at the beginning. I'm always happy to answer questions or take anything else on. Framework number 16 is around growth capital. And the the primary point here is that without a lot of the other frameworks, you're gonna have a really hard time raising capital of any sort. And so I think that's more of what my message is on this slide than anything else is if you need capital to grow, you have to have a lot of these other frameworks laid in place.
Right. Look at the previous 15.
Yeah, exactly. Yeah, go back.
Mhm.
Um, and then another framework is how do you get ready to sell? And how do you go through that process? There's a lot of steps and there's a lot of important things to do. If you are wanting to do that, I would advise you to get an advisor of some sort that can really walk you through the process. There's going to be a lot of financial due diligence and a lot of pressure there. So if you have a bookkeeper or an accountant in your organization, or if you don't have those things, um, there are resources definitely around that you can engage with, but you do not want to do this one on your own. I've never seen it end well when a dentist tries to run this process themselves. They don't want to pay for help. They don't want to take time to get their financials really tightened up, and they've ended up getting paid probably a lot less, unfortunately. And so I put this in here because it's really, really important when you want to move forward with this. You want to be very, very thoughtful and make sure you've got a good team around you that knows how to do this and knows how to help you succeed to the highest level.
Yeah, no, I mean, I think just to add on to that, Ken, I've know a fair amount of other people within the industry, and some of them is this is what they do, right? And
Yep.
I hear stories all the time where realistically, if you're able to put that investment into into your practice to be able to sell it, um, I, I believe every time that extra amount that you're going to receive at the end with the sale is going to outweigh whatever it is that you spent to get it there.
Yep.
So I haven't heard of any situation where it hasn't been like that, and they've used, uh, services where, of course, within the typical scope of a regular dental practice, and there's not a bag of, there's not a lot of ghosts or skeletons in the closet kind of a situation, obviously, but
Exactly.
everything else. Mhm.
Yeah, well said. So Herb, I've got one more slide to show, but it is the special offer. So I don't know if there's any questions that have come up so far that we want to try to address, or I'm also happy to just jump right to the special offer that we're making for all the attendees at the webinar, whatever you want to do.
Yeah, you know what? So I haven't received any questions yet, but before we go to the next slide, is there, um, we've gone through several, or the majority of all the frameworks. Um, Anything specific that you would also just want to, advise people in general, in terms of, accounting or, um, any other types of not necessarily services, but would you just be able to tell people? I know that you're like, well, hey, this is the frameworks, this is what I believe in, this is what people should be doing, but is there anything else before we kind of get to the next stage?
Yeah, this is I've learned this lesson the hard way. So when I say this, please know all fingers pointing at me. If you think it's expensive to hire a professional to do the job right, wait until you see how much it costs you when you hire an amateur.
Mm,
And so when we talk about these things, and if the financial the financial lens of everything that's going on in your business, you want to have good people around you that know how to make sure that is right, it's accurate, and it's going to create the right outcomes for you. And if you do not do that right, and if you do not get the right people around you, that it can decimate the dental practice once it's all said and done. Unfortunately, I've seen way too many that get themselves in too much trouble in this area. So just sort of validating what you were saying, Herb, making the investment to, for example, get to accrual accounting, get some of these reports in place, and give you more visibility so that you can figure out how to grow and improve your organization over time. Those investments are generally, my experience has been that you can get a 5 to 10 fold and sometimes a lot more than that in terms of return for making the investment into some of those things. Is it fun to have to pay to have somebody do your bookkeeping and your accounting and put all these things together and talk about all these, frameworks and all those things? Yeah, I mean, it's for somebody who's not into it and doing it all day long, it seems like it's kind of boring and why should I care? And I want to pay as little as possible to have people help me with that. My experience, again, it's been, I'll come back to the same saying, and that is, if you think it's expensive to hire a professional, wait until you hire an amateur. And I would just advise you to find people that are really, really strong in this area, especially in finance, especially.
Yeah. Well, with that, Ken, feel free. Show us. Oh, we got a question actually.
Oh, great.
Will the recording be available later? Yes, it will be available later.
Perfect.
We will send out the recording to everybody that's attending. We also do plan on making the slide deck available as well. So that is not an issue.
Perfect. All right. We'll jump to the special offer for everybody who held on to the end of the presentation. Here's our special offer. I believe in accrual accounting so much that if you will make my organization, if you'll give us the responsibility to do your bookkeeping, we will convert you to accrual accounting and keep you on accrual accounting as long as you are one of our clients. And we will not charge you any more than you're currently charged for what's happening. So think of this, you're paying, I don't know, $500 a month for each location, or, there's some number that you're paying to get your bookkeeping done. I'm telling you, we will do all of that bookkeeping for you. Plus we'll convert you to accrual accounting, however many locations that you have. I've never seen anybody offer this. I've never seen anybody do this. This would be highly, highly valuable for you, and we would love to be able to do it.
Yeah, that's a great opportunity. And that's very generous. So I appreciate you releasing that and mentioning that.
And then my contact information, I can put this up. You can find me on LinkedIn. You can send me an email. You can text me or call me on that number. Come to our website, whatever you'd like to do. There's a lot of information in all those places, and I'm happy to connect with anyone if you have specific questions or if there's anything I can help with. Always want to try to be a help and a resource. This dental industry has been amazing to me, and I love the opportunity to give back.
Yeah, well, I mean, you've been absolutely wonderful for, the whole past hour, Ken. And for anybody who doesn't already follow Ken on LinkedIn, he's been getting active on LinkedIn, posting things, and it's been wonderful. I think he posted something earlier today, and something probably like the end of last week, all of which are different points of what he's talked about today with us and within the financial framework. So, a little bit of the gold nuggets here and there that have been incredibly helpful. So, Ken, I really appreciate you taking the time to be able to go over this with everybody that's here. As I mentioned, we have this recorded. We will be able to send this out to everybody who's attending, and also those who registered and were not able to make it. We will. Ken, I believe also you mentioned that we can, if anybody requests to take a look at the slideshow, we could probably send that over to them as well.
Absolutely. Yep.
Perfect. Well, then other than that, I'll keep it open to see if there's any other questions that we get. But, Ken, if there's anything else, I just want to say thank you again for taking the time today. And yeah, absolutely. Thank you.
Yeah, for sure. And again, I'd be happy if anybody's got questions or concerns or wants to just, chat about some things, because some of these things we talked about, maybe, if you've got one practice or two practices, it might be a little early. Like if you're questioning, is it time for me to do this, or is it time for me to get a fractional CFO? Is it time for me to hire an accountant or a controller? Any of those types of questions, I'm always happy to engage. I've been in this DSO world for a long time, and I mean, I'm so grateful. I've got a lot of experience and now a lot of knowledge and information, and I feel compelled to share. So please don't hesitate. And I'm not somebody who's going to try to sell you something. I'd rather just hear, what are you doing? What are the challenges you're having? And then I'm happy to give you advice as to how to move forward. So.
Wow, wonderful. Well, Ken, on that, I'm going to go ahead. We'll wrap things up here. Everybody, you can expect to receive, you should receive a link tomorrow just saying, thank you for attending. Myself and our team, we will work on getting the video downloaded and then onto a link and have that link sent out to everybody. And other than that, I hope you all have a wonderful night.